Hello fellas, welcome back to another market review. Today is June 5th. Um, so today, market completed the higher time frame market maker buy model. S&P highs here, which is annotated with a red line. S&P highs, that's the original consolidation for the hourly buy model. And then we had the external liquidity at the buy side is all-time highs. So today it knocked out both of them. But let's see what happened during New York session. So here, after since yesterday till today, 10 o'clock, market did not form any SMT divergence. There was a trap here on another time frame, and then it rallied more, and at 9:30, 10 o'clock around that time on the 15-minute time frame, it formed the first bullish SMT divergence, which sent the price higher. So that being said, let's dive into the 1 minute chart and let's see what happened, and let's walk through the whole New York session. So this is divergence on the 15-minute. Initially price accumulating mainly because of 10 o'clock credit fall news, which caused the S&P divergence between ES and Nasdaq. So here, what I'm looking at is kind of very choppy price action. I'm not gonna lie. Goes for the buy side, the sell side, does both, delivers both sides, kind of like broad range formation, and seeking a short profile basically. But then here, I think it comes down to the CEO of this wick kind of rejects it, right? There's a rejection candle, and then it became very choppy. Like you guys can look at the wicks and see how it delivered here. How it's printing there, so it's kind of like indecisive. But there's an order block there, and as long as that holds, it should send higher, right? So price came down to the mean threshold of the LB, then rejected it and traded above it. Okay, and then it had an expansion. Now in that expansion there was no retracement whatsoever initially, so it kept expanding. There's also a 15-second S&T somewhere here. So it tagged the short-term buy side first, which is here. Tagged the short-term buy side, kept going. So at the moment it tagged out the short-term buy side, as you can see, it actually displaced above it. That's the first indication. Formed an OB here. Never tested the fair value gap, so they became breakaway gaps. Ran all the way. Okay, this rally was almost from the OB mean threshold. Let's take a look at it from the OB. 100 points, very massive. Then here, it's formed an S&T divergence at the highs on the 1 minute, and we had a couple fair value gaps here. This is the first one, this is the second one, and this is the third one. So for me, technically none of those fair value gaps has that much meaning, because what I'm focused on is how deep can a bearish S&T divergence send price lower, right? So here, divergence sent price lower into the lower fair value gap, kind of formed inversion fair value gap, which doesn't necessarily have a meaning because it's not a trap, but it was reacting it, so it never violated it back above, right? And at the time, formed a new divergence in between these highs, delivered the sell side one more time here at the lower fair value gap. There's like, for me, it was really hard to find a dealing range here because this leg was very strong, and there's no S&T divergence whatsoever. So it was really hard to, maybe like you could take a look at the 15-second chart, find a dealing range there because there's a 15-second divergence there. But anyways, so here in this accumulation, what happened was, let me pull up ES to showcase that. All right, about here. Okay. What happened was price was unwilling to go lower. So this is setting the stage for the first leg. Okay, not here, not down here, but this becomes the first leg. Why? Because it is accumulating in a fair value gap and forming the very first SMT divergence, basically. Okay, so here is the divergence. I believe I'll take this high, this low. Nasdaq making lower low. He has made a higher high. So that is the first leg initiation, basically. Here, and then breaks out, tags the short-term buy side. Now we have a dealing range, or we could have a dealing range. We can have a dealing range. So it breaks out, short-term buy side was gone, fair value gap, kept going higher into the SMT highs. This delivery was from, let's call it SMT, 60 points, and from the fair value gap, let's take it from the CE though, to be fair, it's 30 points. So it rallied all the way above. Now here, that price action, oh, where did the ES go? That price action, now we gotta look for, if you missed the first move, like I did, I think I was overthinking. But anyways, that doesn't matter. Here after the breakout, what you need to do is, if you missed the move, you wait for bearish SMT divergence to set it high, right? So here is the first one, okay, right there. Now, why is this important? This is important because it is potentially sets up for the second leg, okay? So here you have a dealing range. Now it comes down to range EQ and rallies and invalidates the buy side, okay? So here invalidates the buy side on ES as well. Then it sets a new high. There's a new SMT divergence. That could be a high. Come on, you can do it. That could be a high. Now you can take a look at that reading range. Now it comes down to range EQ, goes for the highs again. So here, let me take a look at ES as well. I'm not sure if it came down. It didn't come down also. So now it comes down to range EQ. So technically, or ideally, or at least for me personally, there's no long entries in this price leg because it never comes down to range EQ. So if you're longing in premium, you're taking much more risk. Let's keep reading. I'm looking at the lows right now. There is an SMT divergence formation here at the rejection block. So there's a rejection block here. At the rejection block, it is forming. Let me annotate this actually. It's the red rejection block. I wasn't watching price at this point during the live session. It forms an SMT divergence there. Here at the lows, bullish SMT. Right about here. And then tags the short-term buy side. Okay. Now, as it expands more, now you gotta be reading the highs again. So you gotta wait for a bearish SMT divergence this time to see whether market is willing to set a high or not. So here, there's the first bearish SMT divergence at the high. And now you have a new dealing range from the SMT low to SMT high. Now this time, it comes down to, let me delete all that and zoom in. Now this time, it comes down to what? It comes down to range EQ, accumulates a little bit. Here, I wouldn't use this one though. I would use this one because there's no accumulation in this fair value gap. There's an accumulation below this one though. So accumulates below that fair value gap, flips it with 133 candle, 1:33 p.m. This becomes trap afterwards, trap fair value gap. And as long as it stays above, which it did, it's delivering buy side. So here I'll draw in line in time. Short-term buy side, long-hanging fruit objective, take it out, and also I tagged out all-time highs. Here, the buy side is all-time high. So here, this is a perfect delivery. This is the second leg that could have been traded, but again, I wasn't watching the price. I just had an alert here. I came back at like 2 o'clock-ish, and it tagged all-time high. So I was like, I'm not gonna look at the market. So let's keep going. Now I'm looking at the highs again. There is no S&P divergence here, and at the lows there is one here for the second breakout within the trap fair value gap. Let's zoom in, and it expands more and more here in this leg. Now I'm reading the highs. Here there is an equal highs and lower high on Nasdaq. Market sets a new dealing range with that S&T divergence. So from S&T low to S&T high, comes down to range EQ, rejects it, sends it to the buy side. The buy side is low hanging fruit objective, tags that out, comes back one more time because this was another S&T divergence on the 5-minute this time, so it has to deliver its objective, which is what? If you're seeing an S&T divergence on whatever time frame, like for example, this is 1 minute, right? The 1-minute bearish S&T divergence objective is to take down price into sell side on that relative time frame, right? So if you're seeing an S&T on the 5, on the other hand, what's its objective? Its objective is to go for the 5-minute sell side, which is this one right here. Let me go on the 5 so you can see it too. There you go, 5-minute low, got tagged. And that's also range EQ. The clue is it could target the sell side here, but look at the reaction of the range EQ. It is still respecting. Okay, I can change the dealing range now. It is still respecting the range EQ. Okay, that's the clue. Reacts very sharply through the last 10 minutes of the market near close, tags the short-term high, and closes very strongly. Now going into tomorrow, what I'm looking for is, oh wow, that's pretty. What I'm looking for is, hold on, actually, I'm gonna keep the S&T divergences on the chart. Actually, this is on the 1 minute. Let's delete it all. Let's delete it all. So here, let's take a look at what's happening on the hourly first. So I'm gonna skip the hourly actually because there's no structure. It was just an expansion. Obviously, going into tomorrow, I'm looking for a continuation. Today's close was very strong. Maybe on Friday we could see a retracement with NFP. So here on the 15 minutes, let's pull yes. Here on the 15, the divergence is right about there. So if it sets a high here, I don't know if it's going to, but so far, because this is the swing high, I'm going to take it from here just to get an approximate pullback idea. We're looking at this fair value gap as a pullback. I don't think it's going to get down there tomorrow, but it could also, depends on the price action. I don't think it will though. I think it's going to be a continuation without a pullback. I'm thinking about maybe this high, because this is a high time frame order block. Maybe here could get tagged for as pullback and rallied afterwards. So here on the 15, let's take a look at the 5. I don't think it's gonna get down there though, like I said. I'm looking for a strong continuation tomorrow. Maybe like another 200 points during close, market close or something like that. So on the 5, there is no bearish divergence there. There's no bearish divergence here, no bearish divergence there. I think we have it here. We could also use that dealing range for a shallower pullback here. So maybe this low could get tagged on either ES or Nasdaq. And then form a buy model, goes for this high here. But again, it's early to tell. You got to see the overnight price action. I don't even know if it's going to form an S&T divergence at the highs or not. You know, it could just rip through while I'm sleeping as well. But anyways, pretty insane day today. I'm actually sad and mad that I missed the move, but it's part of the game, right? Hope you had an insightful day though, and green day. Before wrapping up this session here, I'm gonna show you guys one thing. Actually, two things. One thing is the low of the day today was the daily fair value gap CE. Now I go down to 1 minute to showcase you that. Here is the low at precisely. Let's see. This is Tuesday, market close. So here's the market close overnight price action. Comes down there at 3 o'clock. London silver bullet. Forms a trap. So here, let me zoom in. Forms a trap. Violation. Comes down. Rallies. So that's something to note for the journal purposes. Then also one more thing that I'm going to go over is the standard deviation. Here we have the last manipulation leg on the hourly. The reason I'm looking at the hourly is it's the hourly bar model technically. We have the standard deviation of this manipulation. Oopsie doopsie. Reverse this. Turn on prices, and today tagged -1 standard deviation projection of the 95.25, pretty accurate. So it tagged the -1 standard deviation projection of the hourly manipulation. Here, as you can see, the bodies are pretty much respecting the volume balance gap from today. Also holding, but anyways, I'll talk to you guys tomorrow in the morning. Hope you guys have a great day, great night, and had a wonderful day as well. But for today, take care, have a great day.